You're watching us here on this special programming where we continue our analysis and interpretation of the budget for your portfolio and investment decisions. And today we have with us Vishal Gutka of HDFC Securities. Thank you, Vishal, for joining in. You know, we saw the budget, we heard the budget yesterday, we saw this reaction on a couple of stocks as well. But what is your overall view on the consumer sector, specifically from the announcements that were made in the budget yesterday?
So, first of all, giving a brief context, what has happened in the FMCG sector and why we are bullish on the consumption sector. So, from FY9 to FY20, Nifty EPS was around 12%. Nifty FMCG EPS was around 12% CAGR. Nifty Index 50/50 was around 5% CAGR. But that led to outperformance of the sector. Now, from going forward from FY20 to 24, what happened that Nifty Index EPS grew around 15% plus, whereas Nifty FMCG was high single number of 8 to 9%, which led to underperformance of the sector. Now, what are we expecting going forward is that there is an earning convergence that is likely to happen between the two. Nifty 50 earnings are expected to be in the range of mid-teens, whereas the earnings for FMCG company as a whole are likely to pick up going forward, maybe into low teen to mid-teen kind of number, which will aid the sector outperformance going forward. With regards to budget specifically, government has done a good job in balancing between capex and consumption. So this seems to be more balanced budget, where they increased the allocation towards the rural sector by approximately around 11%. So allocation towards rural development has gone up by 11%. This should aid rural recovery. Over and above that, this year we are expected to see above average normal rainfall, and given the base is favorable, we expect companies having high rural salience, plus companies increasing their distribution network in rural areas to do very well. So we're doing positive on companies which are having high rural salience.
All right, positive on companies which have high rural salience. I'll speak to you about the individual stocks in just a bit. Just wanted your thoughts on two things. One, you said while the Nifty EPS was lagging the FMCG EPS, and thereafter we had that reverse, and now we're moving towards convergence. Throughout all of this, when the FMCG EPS was outperforming the Nifty EPS, we actually saw outperformance in the stock price as well, much more than what the Nifty did, to the extent that there was a lot of re-rating. How much of that is now limiting the further upside that we're seeing in terms of valuations? Where do we stand now versus what we were over the last 5 to 10 year average?
Yeah, so valuation more or reasonable or fair, I would say. There's not much scope left for re-rating. But if you see the other side of the index, that is capex heavy stocks sectors, there's a massive re-rating in terms of multiple. So there's a big gap in terms of multiple when you see with regards to the sectors which are capex driven. So although lower scope left for re-rating from here onwards, there's going to be more earnings led growth that would come through. And again, it will depend how other sectors are performing for sector to re-rate from here onwards. Because otherwise, if you see from a context of historical perspective, more or less multiples are near the average of 5 year or 3 year perspective.
All right. And typically, what would the differential between the multiple of capex versus FMCG or Nifty versus FMCG be for one to understand the relative underperformance that we've seen in terms of multiples for FMCG?
Yeah. So often I don't have a number, but I think the what we had seen from FY9 to FY20, the differential it was trading at substantial discount to FMCG index. Now we are seeing a substantial premium to the FMCG index. So that's a big divergence that we are seeing in terms of multiple of capex versus what do you call multiple of FMCG index per se.
All right, then final question then. Let's get stock specific. What are your top picks if you had to bet on a stock, top 3 stocks in the consumption space or the entire market over the next 12 months or so, budget or no budget, the ones where you stick your neck out and say that these are likely to outperform?
Sure. I will give you 4 stocks rather than 3 stocks. Jyoti Labs, Godrej Consumer, Marico and HUL are our 4 topics that we are very bullish upon, where we believe that irrespective of what happens from the government side, this company are expected to do much better during F25.
No view on ITC?
ITC, we are advising client to trim position in ITC because recent rally, I think nothing much upside is left. Plus, our view is that cigarette volume growth is expected to be muted in near to medium term. Even their competitive intensity has really inched up from Godrej Philips, which we have seen in past 2 quarters. Plus, historical growth rates for cigarette has been around 1-2% only in terms of volume. So now, with these 2 things in picture, I think cigarette EBIT growth should not be more than 5 to 6%, unless the company takes substantial price hike for the cigarette segment.
Great speaking with you. Always a pleasure. Thank you so much for joining in.
Thank you. Thank you. Always. Thank you.